What's going on, traders? Welcome back to my YouTube channel. I hope you're doing well, and of course I hope you've had a good week. So today's lesson, we're going to be looking at currency strength and weakness, and I'm going to give you an example today how you can use correlation to identify strong behavior and momentum in the market to give you a good indicator when you should be taking your trades. Now, of course, the time that you take your trades is a big factor. Obviously, you want to be trading during high volume periods, but this tip alone will really make a big difference to your trading outcomes. And today I want to share that with you. So stick around. I hope you enjoy this video. And if you do, make sure you hit that like button for me, subscribe if you're new to the channel, and of course turn on notifications for future videos. As I always say, continue to trust the process. Let's get on with it. So traders, to illustrate what I'm talking about here, what we want to be doing as traders is taking trades when we can identify strong momentum in the market. And if you've not watched my previous video, please go back and watch it. I'll link it in the description. And we also want to take trades when we know that there is high or strong correlation among the sentiment of the market, meaning this here. Now, how can we do that? Well, the first thing we can do is we can first isolate a single currency. So in this instance, what we're going to be doing is we're going to be isolating the pound. Why? Because the current structure of the market is bullish. The current behavior of the market is bullish. And what we want to do is make sure that, let's say now, if we want to trade pound JPY, we've got a good indicator as a whole that there's a very high chance the market can continue bullish. So how do we do that? Well, all we need to do, and this is the trick here, is we need to identify the current status of the current candle close. This could be on your 4-hour, this could be on your daily, this could be on your weekly, this could be on your monthly. It really doesn't matter. You can even go down as low as your hourly, 30-minute, 5-minute if you really wanted to. What you need to make sure that you're doing is when entering your trades is using your lower time frames to match the behavior of the market so that you know that you're on the right side of the market. So now, in order to identify the behavior, we've seen that this current candle was closed. We need to match this correlation with the sentiment of the market. How can we do that? Well, it's very simple. We're now looking at pound CAD. We want to trade pound JPY and we want to take buys. The reason we want to take buys is because the current structure of pound JPY is bullish. The current candle close, or the previous candle close, is also bullish. Now we validate that. How do we validate that? Well, look at pound CAD. We have a bullish close also. So now we add a second confluence to the idea that pound JPY is a good idea. Maybe we should look at pound JPY so we can highlight this illustration. So we're on pound JPY now, 4H time frame, and we can see that the previous candle closed bullish. We have an indication in the back of our minds that price can continue bullish back to the highs. We also have previous data that illustrates that the current behavior of the market has been bullish. We've also just broken above the previous level in the market where price was holding for a long period of time. Is this enough to take a trade? Some instances it is, but if you want high probability trades to make sure you're on the right side of the market at the time you're about to take the trade, then what you need to do is find that correlation. So we've identified now the singular currency, which is pound, is strong because of pound JPY closing bullish. We now go down to pound CAD, and we can also see that the current behavior of this market is bullish. We've recently just broken above this level here at 71.41, multiple wick rejections, and now we have a close above. And we'll just use one final pair to continue to highlight the confluences we need to take this trade with confidence. The next pair we'll take a look at is pound USD. Now, this is all the same time, which is the 22nd of December. This is the pre-London candle, which is now just closed at 10 a.m. We have a bullish close here from pound USD above this level. We have a bullish close here on pound CAD above this level. And when we go to pound JPY, we have a bullish close above this level, which indicates that the pound is very, very strong. Now we have those confluences. The only thing we have to do is scale down to our lower time frames. But what I want to highlight here is this. When you use this technique in your trading, You don't necessarily need 10 pairs to do this. If you can just use some of the major pairs that have the pound currency symbol in it, and you can use maximum two pairs to add confluence to the pair you want to trade, let's say pound JPY, then that is more than enough. And what you're looking to do here is, let's say we want to take buys, we want to see a bullish close. On GU, we have that added confluence, which is that bullish close. And then pound CAD, we have that confluence, which is a bullish close. Now, some of you might be asking, well, is this enough? What if the structure is not showing that it's in an uptrend, but it's in a downtrend? Well, I just want to make this very clear and really try to help you with this kind of thought process and notion. When you come to the chart as an intraday trader, the only thing you're trying to do is look for a potential trading opportunity that you can trade for that period of time. Sometimes you may be in the trade for longer periods of time. Others, you may just be in and out. It just is what it is. But the whole idea is that as a day trader, you come to the markets today to identify what could be a potential trade based on today's behavior. Look for the confluences that add to the idea that potentially price can continue bullish, and then execute the trade. It's not about being an analyst and try to figure out whether GJ is going to reverse here and go all the way back down to 149,400 because there was some controversy that happened in Parliament today. You don't get paid to be an analyst. You get paid when you can identify high probability trading setups and you can execute them. So we've done that. We've used pound CAD and pound USD to identify that pound is strong today. Now, all we want to do is look for a potential trading opportunity that reflects all the hard work we've done up until now to identify that the market can continue bullish. So let's head down to our entry time frame. So now that we're on our entry time frame, we can see here that the current market structure has been pushing bullish. We here have an intraday trend that's making higher highs and higher lows. Now, what I want to point out here is this. If you identified early on that the pound was strong, you had your confluences from the other the other pairs, then at any stage that this market is pushing bullish, you could have bought it. And there is a very beautiful strategy that you can use on the 5-minute time frame that will help you to get into trades like this. But we'll save that for another time. What we now need to do is focus on looking for a pattern that reflects our higher time frame bias, which is pound strength and the idea that the pound will continue pushing bullish. So we've come to the charts now. We can see prices failing to break these structures. Is this a good time to take a double bottom? Probably not. One rule of thumb I want you to remember is that the best trades are always going to be from key levels, and as part of as an intraday trader, as long as price is respecting the previous high, lower high, then there's a very high chance that price can continue bullish. So as we're looking at this now, we can see that price has come back to this level. We can see prices respecting it. We have multiple wick rejections. And now at this stage, this is where traders find it difficult, because we know pound JPY previously closed bullish, indicating pound strength. Pound USD closed bullish, indicating pound strength, and pound CAD closed bullish, indicating pound strength. But at this moment in time, if you understand how your higher time frames reflect on your lower time frames, the current 4H candle is bearish. But what you have to understand is happening, or what is happening, is that the 4H candle has just closed bullish. The current 4H candle has now just retraced to create what we call a bottom wick before then potentially pushing bullish. So is this a good opportunity to take a trade? Well, why not? We now can see that the market is respecting the previous structure. We can place our stop loss below this structure, and what we can anticipate is that price will continue to make a new higher high. Can this trade lose? Absolutely. But can't any other trade just lose on a normal day regardless of what you're doing? Of course it can. But now that we're adding confluences to our trades, identifying pound strength, having the confluence from the sentiment of the market, which is pound CAD and USD supporting that, and we have a deep pullback pattern, which is a very powerful pattern in the markets, we can take this trade pretty confidently, knowing that there's a very high chance that the market will continue bullish. Now, this is something that I use on a daily basis, every day. And this is where you will find that the difference in your process of trading differs from that of mine or other consistent and profitable traders. The fact that you have a step-by-step process, you identify sentiment in the market, and you can add confluences to your trade is what really makes a difference. I really do hope that this was useful to you, and if it was, please smash that like button for me. Hit subscribe if you're new to the channel, turn on notifications, and until next time, continue to trust the process.